we have some huge news about Disney that just came up. This is some crazy stuff, no doubt about it. Overall, you see the stock pretty well followed just the pattern of the market today. It was just a rough day. This bad boy was, down a solid 4% today. Really, if you count based off of what it started at, it was only down 30.6, but then after hours, another 2.5% down. So why is this? Why is it the case? Well, huge news. Bob Iger is out as the CEO, stepping down immediately. This is a change effective immediately. The Bob Chapek, you know what? Sorry, guy, can't pronounce your name. Bob Chapek, maybe? He is the 7th Chief Executive Officer. That is crazy stuff. So Bob Iger will take the role of Executive Chairman through December 31st, 2021, the end of his contract with the company. Chapek has been Chairman of the Parks, Experiences, and Products Unit. So that's obviously a pretty interesting unit there. It's an area that's been pretty successful for them, no doubt about it. So overall, you think about Disney World, Disneyland. That's what you really think about when you're thinking about that unit there, and they've done a good job. There's no doubt about it. So it's interesting to see. I think overall that this new guy, Bob here, Bob replacing Bob. Obviously, they have a thing for Bobs. Everyone knows Bob Disney was the guy who created, he founded the company Disney. Everyone knows that. They must have a thing for Bobs. That's a joke, by the way, but that's okay. Not everyone got it, so I had to explain it just in case not everyone got it. But, so, pretty much you hear Bob saying here, Mr. Iger, that is. So, not other Bob. Let's not be confused. Don't confuse the Bob and Bob, please. With the successful launch of Disney's direct-to-consumer businesses and integration of 21st Century Fox well underway, I believe this is an optimal time for a transition of a new CEO. So now there is an investor call that just happened. So the question is, I think on everyone's mind is, what does this effective immediately mean? Why is this the case? These typically, when you see an effective immediately, there are definitely some things that come to mind. For one, obviously it sounds like there's the potential that he was kicked out of role. Effective immediately could be, a non-mandatory or a pretty much he did not voluntarily step down, is what it sounds like. That could be what it means. It also could mean that he had done something bad, if you know what I mean. Occasionally you'll see it where CEOs get caught either, some sort of relations with employees, stuff like that. It happens, or some sort of scandal. Frankly, let's just be clear. Let's be clear. It happens. That, or you could think, is he sick? Is there some sort of illness or, something worse, some sort of disease that is eating away at him that he had to step down right away? It makes you think, what is going on here? But I must say, guess what? The investor call, I could say it answered some questions, no doubt. So, you see here that obviously there's a big shock due to the surprise announcement of the immediate exit of role. It's an exciting day for Disney, a historic day, and I am thrilled for Bob. Obviously, we're not talking about Bob Iger. This is Bob Iger saying it about the other Bob. Bob and Bob. They're best buds. Best Bobs. They're really best Bobs. Chapek has been with the company for nearly 3 decades. 3 freaking decades. This guy who's had 30 years with this company. So, from a credentials perspective, this guy knows the company well, and I think he's going to do a perfectly fine job. I just want to throw that one out there as well. So he's well respected within the company industry. I think that new Bob is going to do a perfectly fine job, and I do kind of agree that it's a decent time for this transition to happen because we're not necessarily too well established on their new services they've brought out. nor these Fox assets and what they want to do with them. So it might be smart to have another guy take over the CEO role and run this company. So as for Bob, we see why now. Iger says, good question. It comes after closing the acquisition of Fox Media assets. But with the asset base in place and our strategy essentially deployed, Iger says he wants to spend as much time as possible on the creative side, which becomes the biggest priority. And I think this is a very valid answer. Obviously, I think this is the answer that they have to give anyways. Just smart as, it's an investor call. It's the smartest thing to do is spin it in a positive manner anyways. But I do think this sounds good regardless. If you think about it, what's going to have them win this streaming game, right? I'm not going to say it's a war. It's not a streaming war. There's going to be many, many companies that are competing here, and they're all going to find success. Majority of them at least. So it's not just one that's going to find success, but what's going to have them have success? It's going to be good original content. There's no doubt. And I think Disney's already got a wonderful backlog of that. There's no denying. Disney historically just has fantastic movies. So what's going to bring more people onto this service? Well, it's going to be original content. You already see a big success with The Mandalorian. And now, from here in the future, what do you expect? One thing I would like to see personally would be, how Netflix, they had the Marvel TV shows, and I think it'd be interesting to bring them on board here over on Disney Plus. I think a lot of people are interested in those shows, and it'll just look good. Secondly, let's just be fair here. Speaking of those Marvel TV shows, can we please get The Punisher back? I just got to be honest. That show was insanely good. And guess what? They did actually sign John Bernthal for another season. So the question is The Punisher coming back, or is that too gruesome for a Disney Plus environment? If they want to keep it kid-friendly, it makes sense. They could always use Hulu, though, because that's one big factor. Disney has pretty much sole control of Hulu at this point. They have majority control, at least. So they can place that content on there if they really chose to. Same with the other Marvel things. Or do they want to have completely just unique content on there that has never been seen before? Regardless, I do think it's important to have more people involved in the creation process for this content. That's the future of what this company is going to be growing based off of. That's where you're going to see big growth. This is obviously a service in which they've massively outdone consensus numbers on expectations for subscribers, and I think they will continue to, and it'll only get better if they keep that catalog of original content up. That's really the focus at this point. So now I really wanted to go look at where this company's at and whether or not this company is at a point where it's worth taking a look at purchasing shares. I did want to start off, obviously, if you look at this stock historically, I love looking at this 5-year chart because you see very big stagnation from the time of 2015 on to 2018. Just stagnant, not much movement in this stock. And then you see, really since 2019, we'll look at these lows in the end of 2018. As we all saw, it was a rough time for us. Up 23%. At one point, this thing was up a good 45% around there from the lows of the end of 2018. So this stock actually found some movement in a time in which, it's a very boring stock, all things considered. How did they find that movement? Well, it was really entirely based off of the creation of a little thing known as Disney Plus. So obviously, this is just a fantastic service, new streaming service for them, and the goal is going to be content creation of a good magnitude. So obviously, you'll see these movies go into theaters, and then you ideally want to see them right on Disney Plus right after that. So now with the stock down in the below 130 range, you may consider, is this stock worth picking up again? And I think there's multiple things that I have to say about this. If we're looking, I think it is important to mention here, we look at the revenue for this company. A not much movement here from 2016 to 2017, but you see from 2018 to 2019 a big jump, and trailing 12 month a big jump as well. So obviously the reason for this is going to be through Fox acquisition. So obviously this company last year paid for 21st Century Fox, and they have their assets now. So that is a big portion of this revenue. But you do see a big increase, and really where that big increase is coming from is going to be your Disney Plus. So this is an entirely new sector for them. Before they just had part of Hulu, but now with this acquisition, they have a majority of Hulu. They've got Disney Plus as well. So they really have a lot going for them in terms of the streaming game right now, and I think they're doing very well on it. But, as I have to mention, you do see, from this operating income standpoint, which obviously it was rude to me there, but if you look at operating income, which obviously we want to look at, give me back over here. If we're looking at operating income, so this is a company that actually has gone down in operating income, and they make less profits now, and there's a good reason for it. And I have to say, it's Disney Plus yet again. And we see this with a lot of these streaming companies. To be fair, it's harder to make a profit in these streaming companies. It really is. And I think Netflix is a great company to look at for that. I think they're a good model, and you see the lack of profit that Netflix has shown, but you see the share appreciation in the meantime. So at this point, investors tend to wave off, at least for the time being. Investors are kind of at a time where they're waving off any sort of decrease in earnings per share or profitability. It's really a thing that is not highly considered at this point in time. And again, you see that through a company like Netflix, no doubt. So the valuation of this stock technically should go down if you think about it, because they will be lowering EPS. Now, they are growing revenue, but they're lowering EPS. So if you think about it from a PE ratio standpoint, this stock should be decreasing in value. The PE ratio will go up if it stays at current value. So the question is it worth picking this bad boy up? I'd say I might give it just a little bit of time. I don't think there's any denying that investors are going to be shook by this move. Bob Iger stepping down is a big deal for him, because he had a lot to do with this company and how they're doing right now. So him stepping down is a big thing, and I think investors might sell off for at least a couple days now as a result of it. But I think for the long term, I really like where this stock's at right now, and this pullback is pretty darn nice. And if I can pick up shares under 130, I'm certainly going to consider doing that. And I think you should too. I think Disney's a very good company, and I think they are, they're just going to rock it. There's no doubt about it. In the end, Disney Plus is going to do very well for them, and they're turning from a stagnant value stock to a stock that's more of a growth stock because of this new streaming service. And I'm excited to see where it leads the company. Really hope you enjoyed this. Let me know if you want to see any more good content, what it might be about. Let me know if you have any ideas for me, if there's specific stocks you want me to talk about.